We're delighted that Minister Sri Mulyani has agreed to be with us once again. Minister, you've become a real fixture of our recent Fitch on Indonesia webinars, and we're honored to have you here today. So, Minister, let me ask you to begin with about your view on the growth outlook for Indonesia in 2021 and beyond. How do you see growth, and why is it that growth has weakened relative to our previous expectations for the year?
We see the trend of the recovery is still there. The consumer confidence is growing. We see the consumption of capital goods, that is the leading indicator, like cement, electricity, is also improving. And we also confirmed by the PMI manufacturing, which is in expansion territory. So we see that this recovery is there. And now the question is how strong and how sustainable this recovery. And this strong and sustainable recovery will really depend on the COVID. You see that January, February, we are a little bit holding back because of the increasing cases of COVID. This has happened everywhere in the world. I think after the Christmas and New Year holiday, there is a spike in the cases that then forcing us to do a restriction movement again. And that's definitely affecting the late January and months of February, at least on the first 2 weeks of February. We are expecting by March that this is going to recover quite strongly. This is in addition to measures that we are also put, for example, like the incentive by Ministry of Finance for the VAT luxury for car, as well as on a house purchase. This is a combination effort by Ministry of Finance, the OJK, as well as Bank Indonesia. So we try to create and restore the confidence and the purchasing power of the people. On the growth side, the 2021, our estimation is between 4.5 to 5.3. If you look at the OECD, they just recently revised up their 2021 projection for Indonesia from 4.0 to 4.9. I think it's aligned well with the IMF around 4.8. So for us, between 4.5 to 5.3, where the dynamic or maybe some that we need to watch, some aspect that we need to watch for 2021. First, of course, the global spillover effect of the policy in the United States. You know very well, with the 1.9 trillion or more than 13% deficit in the United States, it will definitely boost the growth in the United States. But at the same time, we also watch the situation in which the market, especially financial market, have a more anxiety regarding how they respond, especially with regard to the inflation expectation and the increasing of the US Treasury, which is, we saw it quite significant since January to March. It's already increased by 85%. And also at the same time, of course, strengthening dollar or capital outflow from the emerging market. These are all the factors that we really need to watch, because that's definitely affecting.
On the policy side, you've already alluded to it. Indonesia has been quite proactive and adopted unconventional policies in at least two respects. One is you've abandoned temporarily your 3% fiscal deficit ceiling. And the other is that Bank Indonesia has been engaging in financing of the fiscal deficit, which is very unusual for a central bank in an emerging market like Indonesia. So let's begin with the fiscal response. Tell us more about why the deficit ceiling was abandoned and how you plan to get back to the 3% ceiling in 2023.
In the previous crisis, if you have the volatility or in this case, a panic in the market, usually it's only a couple of days or maybe week, and then confidence restore, and then market will start again. With the COVID, what you're doing and what you saw in this case and continue seeing today is that there is like a stop and start, stop and start. Every time you see the increasing or the spike of cases, then you stop. This is happening now in France, in Germany, in this case, in Italy, in Spain. So this is like the situation which is unlike other crises before. So how we are going to respond with this kind of situation? with the paralyzing economic activity, definitely the revenue is going to drop. On the other hand, the spending is going to be immediately increased. How you are going to respond on a health issue, how you are going to protect the people, how you are going to support the business and the community and the economy so that they are going to be survive or recover immediately after this crisis. So that was the main idea when we then decided in the cabinet that we need to have an emergency law to, in this case, release the cap that is the fiscal discipline which is adopted by Indonesia for more than 15 years. The track record was very strong for Indonesia to maintain this macroeconomic prudence, both on the fiscal side and monetary side, so that we were able to maintain high growth with stability. Now, this is a very tough choices. So at that time, we decided that we can relieve this kind of cap, fiscal discipline. But in order for Indonesia to be able to maintain the discipline, as well as maintaining the credibility of our commitment of the macro-prudent policy, both on the fiscal side and monetary side, we have to be able to make this as a temporary. Why temporary? Because pandemic is temporary, it is extraordinary, that require an extraordinary response, but this is not going to be forever. And that's why we at that time adopted 3 years, 2020 to 2022, for all what we call it extraordinary situation while the pandemic is going. Now with the vaccination ongoing, there is a more understanding about the COVID. I think we are able to respond it by combining between the activity on the economy without worsening the COVID cases in this case. And that is exactly what we are doing in 2021. In 2022, we do hope that this is going to continue in a much better way, in which growth and the activity of the people can be done in a more normal level, while the COVID is going to tapering. This is why we have the fiscal policy in 2020, 21, 22, above 3% allowed by this emergency law. Now, how we use these fiscal tools? Mainly for the health spending. Second one is on the social safety net increase, and that's why Indonesia, the increase of the poverty is not as worse as what World Bank predicted, because we were able to immediately protect the most vulnerable one, the bottom 40%, which is relatively, they are under the protection of this social safety net. That's why the increasing poverty at 10.4%, much lower than what was predicted by the World Bank, which is above 11.8%, if I'm not mistaken. So it's almost 12%. But we are still having quite a long way to go for the recovery. The small, medium enterprises, which was paralyzed because of the lockdown, now they have the activity, but with the health discipline. But we still continue to provide them with the support, because they are really the job creator, as well as the one who survive and related to the well-being of the people. So for 2020, we have 6.09% or 6.1% deficit on the fiscal, which is double from usually the maximum limit of 3%. In 2021, we designed the fiscal at 5.7%. We are going to watch very carefully, Steve, on both revenue side as well as the spending side, because all this, what we call it extraordinary fiscal situation, will only be credible when we can deliver the recovery, while at the same time showing a continuous, consistent consolidation toward the 3% cap of 2023.
Many investors wonder, okay, if your deficit was over 6% last year, 5.7 this year is your target, and those are worthy spending goals to protect households and businesses through this unprecedented shock. But they wonder just how can you credibly get all the way back to 3% in such short order by 2023? Or I know it's required by law. Are you really confident that you can get there?
We are going to respond in a very pragmatic way. 2021, as I said earlier, with the recovery, which we expect to happen on the second quarter and third, and then continues for 2022, then all this extraordinary support from the fiscal side is no longer needed. We are fully aware that we should not withdraw immediately and abruptly. That is going to then disrupt the recovery itself. So Bank Indonesia have their own, of course, observation regarding how the path of the recovery, especially a combination between recovery and the expected inflation, how they are going to design the monetary response. But we are in a very close communication in terms of how we see the economic situation and how this kind of policy coordination will have the much better or the most effective way in supporting the recovery. Certainly, you know very well that the recovery can only be sustained if it is driven by the investment, export, and consumption confidence. And that it should not really dependent continuously on the support of government spending, because it is not good for the budget itself and also not good for the economy. And especially for emerging countries like us, it is definitely not sustainable. So for us, really, the game changer is going to be how the COVID can be addressed, of course, with the vaccine and all. And with that COVID situation can be controlled, then you have the recovery that can be accelerated. And that is exactly what is happening now. It is actually started from the third quarter last year and continued this year. And it will be accelerated, especially on the second quarter. We saw the consumer confidence restore. Investment is already now starting to pick up. As I said earlier, export now is already growing by 8.5% on the first 2 months. Import for the capital good is also increased. So these are all a good sign of the recovery. When this is happening, that means the business restore and recover. Consumer is going to also have a confidence to spend, especially the upper level consumer. And the export is also continue, commodity price improve. With that situation, the machine of the economy is already now working. The other 3 machines, that is consumer, investment, and export. So the government is not the only machine which is working, which was happened last year. Last year, 2020, we are the only machine which is doing all the job, if you can. And that's why I always use the word, the budget working extremely, extremely hard. But this time, when all the machines starting to move, then the government is not abruptly then shut off the machine, but we are going to tapering. And that's exactly what we are doing in 2021 and 2022. The 2022 budget has not been actually submitted to the parliament, so we are not yet discussing it. But at least we will observe and watch this recovery carefully, where it is really recover, whether their fundamental is strong, and then how we are going to design this, both the tax revenue or the non-tax revenue target next year, and how we are going to design the spending side and below the line on the financing and investment. These are all ongoing. This is still continue because by August, President is going to submit the budget document to the parliament that I'm going to discuss until October 2021. This will decide how big the deficit that we are going to have in 2020. Definitely is going to lower than this year. Definitely also showing a sign of consolidation. And definitely this is like a bridging, hopefully it's going to be the smooth bridging between the extraordinary time of above 3 years into the 3% in 2023. We are now also exercising and looking at the medium-term fiscal outlook for us. It's really depend on how we are going to improve our revenue side, especially on a tax, but on a non-tax also, we are also have a quite ambitious target, because this is not only commodity driven, but also the performance of many of our state-owned enterprises as well as agency. Then we also have to look at the more detail, the reform on the spending side. I think the spending side is one that we are going to look at the more discipline, how we can capture the efficiency gain because of this COVID in terms of the operation of the government. So we can save on that. We also can hopefully save on health spending related to COVID, so we can use this space for other. So there are so many opportunities that we still can look in more detail on both expenditure side as well as revenue side. And then we also have now the new vehicle like sovereign wealth fund, which they are going to attract more capital so that we can continue have a development without burdening our budget, because this is more equity-based financing. So we are hoping that this sovereign wealth fund is going to become one of the vehicles that can supplementing this kind of need to continue recovery as well as building, especially infrastructure, without creating immediate and real pressure on our budget side.
I'd like to come back to the sovereign wealth fund that you just mentioned, but before we do, if fiscal policy was the engine keeping the economy moving last year and into 2021, then perhaps Bank Indonesia was the fuel for that engine, because you resorted in a very exceptional way to central bank financing. And this is another question that investors ask us all the time. Will this mechanism with Bank Indonesia risk eroding its monetary discipline and independence over time? So why did you resort to this type of financing, and how can you ensure investors that the framework that's brought Indonesia this far will be adhered to going forward?
We saw many central bank in the United States for sure, in which the Federal Reserve even actively buying the corporate bond, or in the European Central Bank also doing the same thing, even on the central bank surrounding our region like Thailand and so on. Why they could do that is because their central bank have the mission beyond just the stability, and this extraordinary situation, they use that kind of situation to actually, together with the government, to try to rescue the economy, which is in a totally deep contraction. So at that time for Indonesia, the thinking, Steve, is how we are going to respond to this extraordinary situation, but without sacrificing or eroding the signaling to the business, to the market, to the bondholder, that this is really extraordinary, a legitimate, credible one. And we need to have an extraordinary response. But it doesn't mean that we will use and abuse this opportunity by abandoning all the good principle. And that's why the thinking at the time is how we are going to temporarily respond it in a credible way. So the first credible response is the emergency law, which is allowing us to have this 3 years extraordinary response. And during this 3 years, we discussed with Bank Indonesia what kind of support Bank Indonesia could provide in this extraordinary situation. One, which is an extraordinary one-off policy, is that Bank Indonesia allowed to finance our fiscal only in 2020 through private placement with the exceptionally zero interest rate. Why it is justified is because all those spending, especially in 2020, related to COVID and to the social spending, was totally public good. If we cannot control COVID, if we cannot make the people feel safe while they are locked down, then Indonesia is going to have a totally chaos situation.
The helping to finance the deficit has also cut interest rates by some 150 basis points in the past year alone. Are you worried that with the U.S. Treasury yields rising, that this could feed through and create volatility in Indonesia's bond market, akin to what you saw in the taper tantrum back in 2013?
Well, we definitely have to be very vigilant to the spillover implication of the U.S. policy. The U.S. Treasury, as I said earlier, from January to the March, has already increased from 0.92 to 1.7%. So it's increased by 85%. Many other emerging countries already increased their own bonds, U.S. denominated, the same. For example, like Russia is increased by 29%. Philippines 48%. In fact, Steve, this is also the first time that Indonesia is actually the yield of our 10 years global bonds is lower than Philippines. This is quite something for us, because in the past, when you have taper tantrum, Philippines was not in the fragile five. Indonesia was there. And then today, we really have to look at how we are going to manage this kind of stigma or labeling, whether we are perceived as a fragile or not. And that's why we really have to address the issue, what is fundamental that is putting us in this perception of volatility or vulnerability. Indonesia, US global bonds, the Indonesia global bonds yield on a 10 years increase only 11%. So you can see the US Treasury increased by 85%. Indonesia, US, the same US denomination global bond 10 years only increased 11%. That means the spread is tightening. That means is that at least some of our bondholders feel that they have confidence to the Indonesia bonds, which is good. And we will maintain this confidence through our policy as well as delivery in terms of performance. The second one, I think if you look at the Indonesia now, that we address the issue of the structurally being perceived as a risk for Indonesia, which is, as I mentioned earlier, current account deficit. So the current account deficit now, the export that we are doing, especially not only just commodity based, we are also building the downstreaming of many of the mining sector. We are now talking about battery for the electric vehicle car. Indonesia is among the biggest nickel producer in the world, and we are not going to just digging this nickel and exporting it. We are now also inviting investors to invest in Indonesia. That definitely is going to strengthen the balance of payment for Indonesia. So the external risk is going to be addressed. We also reform many of what we call it seen as a vulnerability, for example, like subsidy in the fuel. So these are all the situations that we try to address. That mean fundamentally, we are different and stronger than what we were in 2013. But what I want to communicate very clearly that government as well as Bank Indonesia commit to continue support recovery, but we are going to continue also watching this stability, especially related to the inflation and exchange rate and interest rate implication on our what we call it policy framework. So we will look at all the data, and of course we will continue coordinated while also respecting the independency of the central bank autonomy.
You mentioned batteries, and that brings to mind electric vehicles. Tesla's been in the news as a possible source of investment into Indonesia. Can you say anything about that?
The Indonesians still need to have a lot of infrastructure development. We need to have this investment, which require capital to come. The capital cannot come to Indonesia in the form of equity. They prefer to be in a debt because the risk is just minimum for them to lend to Indonesia rather than invest in the form of FDI or, in this case, equity financing. The FDI side, we address it to this omnibus law on a job creation. You can come to Indonesia, we will make sure that all this regulatory, all burden and all complexity will be addressed. And that's why we have this omnibus law with more than 45 government regulation, try to slash all this regulatory nightmare for many of the investment. But the equity financing is still there. They want to come, but they will feel confidence if it is together with Indonesia authority. That's why we create the Sovereign Wealth Fund, INA, Indonesia Investment Authority, in which the investors in the form of funding can partner with us and invest together. That is how we try to address this risk appetite, which is different for many capital, huge capital outside, liquidity plenty globally. They want to come to Indonesia, but they try to find what is the best way to come to Indonesia within their risk appetite and risk level that they already accept and consider. And this is exactly what we are trying to do. Now the Sovereign Wealth Fund is going to then address in a more systematic, organized way First, sovereign wealth fund will look at all the SOE, and that's why within the supervisory body, Minister of Finance and Minister of State-owned Enterprise sit in this supervisory body. And Minister Eric, as a state-owned enterprise minister, he's in the process of reforming the whole SOE, which is overly leveraged in the past, 10 years? And that's why he's going to look at all the balance sheet. So for me, as a Minister of Finance, I said that I'm not going to now easily injecting capital to the SOE. They should work with the sovereign wealth fund. And if they need a new capital, then you really have to work with them. How you are going to do with your own balance sheet. They have many, asset, which is less productive, which can be put in an asset class, which can also provide more values if you putting in this kind of cooperation. So these are all the situations that we are now having. In short, Steve, this is not just a matter of inviting capital to Indonesia. It also changed the mindset of many of the SOE and the way we manage assets in Indonesia. Many of our assets is already there, built by our capital spending, but then it's just sitting there. The value as well as the benefit, especially financially, is much less. Of course, socially, maybe economically, it's also good, but financially, sometimes it's just very meager, it's very minimum. And that's, the way we need to address this issue is try to manage our asset in a much more positive way, constructive way, so that we are going to be able also to invite more capital, and also the way we manage the cultural mindset of managing the asset in a much more productive and accountable way.
Okay, thank you. I think that really addresses the questions we've gotten on that. One last question relates to the financial sector omnibus law. The questions want to know, when is this going to happen? What are some of the headlines that might be in that law?
Again, we didn't waste those crises. We used that as a trigger to introduce independency of the supervisory of this financial sector, the creation of the OJK. And we are now facing with this pandemic crisis. And we know that this pandemic crisis related to the human capital, that is health, social safety net, and education, require a lot of reform. And that's why we introduce reform in this area, whether this is related to the health, universal health coverage, the way we manage with the health facility and so on. These are all undergoing that we are discussing with the Minister of Health, Minister of Education, as well as the social safety net reform. The second one is related to this real sector investment reform. And that's why the job creation omnibus law has been introduced. So despite that we are very overwhelmed with this pandemic, we still passing this law, which is real reform on a real sector investment policy. Now, the third backbone, which is not yet reformed, is on the financial sector, meaning that the industry itself and the financial safety net. Some of this legislation was passed back in 1980 or 1990s. So it's been very old. Banking law, insurance law, non-capital, non-banking law. Now we have the fintechs coming. So these are all the industry that is require more updated law. So there is a need for the reform on the financial sector industry itself. Pension fund, insurance, and all those things. Indonesia is definitely behind on that kind of legislation. The second one, even though we reform OJK Bank Indonesia since financial crisis, the financial safety net that we are having, it's the relationship between Bank Indonesia, OJK, Deposit Insurance, and Ministry of Finance. These are still at the very early stage and need to be always continue recalibrated. Because of this dynamic financial sector stability threat coming from many different forms. It could be from the fintech disruption, it could be from the spillover effect. So we really need to look at this financial safety net. And of course, within that case, we really have to look whether all the arrangement is already there. So without, again, sacrificing the very hard one earn of credibility on the monetary and fiscal policy prudence, we are going to start discussing with the Parliament on this financial sector reform, which is really long overdue and desperately needed to be updated. I think we are in a preliminary. This year is going to be already in a legislation schedule with the Parliament. So Parliament have their own idea, government, and together with OJK, Bank Indonesia, LPS, we also have our own idea about how we need. Now we are going to discuss it in a way that it will provide us with the best, the good, sound, and also stable financial system in Indonesia, and also improving the industry performance on the financial sector. So these are all what we are now discussing with the Parliament, Steve.
On behalf of Fitch Ratings and our audience today, let me thank you again for sharing your time and perspectives. That was very useful. Thank you.